Hello and welcome to this video. In this video, I want to quickly give us something I believe is very crucial, very important for you to understand as a trader, whether you are a newbie or already a pro. And I am talking about how to apply leverage to your trades. So I'm going to be bringing some concepts or terms as they relate to leverage together for you to understand leverage and how to apply it to your trade. Because many just talk about leverage. Yes, one of the precious advantages of trading online forex is leverage, ability to use high leverage. For instance, this particular account is on 1 to 1000 leverage, right? It's applied to 1 to 1000 leverage. So we're going to be using some mathematical calculations to explain leverage so you will understand it the way it really is and how it's applied. So some key terms that will come to play here include I'll be briefly defining or explaining what leverage is, why is it important to use leverage, and then how to apply it. Then this terms will come in lot size or position size. Then we'll look at margin. Okay, we then look at equity. Equity. Okay, so we are going to look at these three things: equity, margin, lot size, as regards as they relate to leverage. Then, of course, price as a factor will also come into play. So we also consider price as a factor. So let's get down to it. Now, people just talk about leverage. How do you know what amount of leverage you have taken, or how is it applied to your trade? Okay, so first that will lead us to defining what leverage is. I will say leverage is now is taken from the word lever. So leverage is defined as a help, an ability to do more with less in the securities market. So ability to do more with less. In other words, you have $250 as we have in this particular account now. Okay, this $250 you can give it the ability to do a work of $500 when you choose leverage of 1 to 2, or you can give it the ability to do a work of $2,500 when you take leverage of 1 to 10, or you can do the ability that you can give it the ability to do much more than that. We'll quickly get onto it. So why leverage? Because in the financial markets, and we do not have the big money, the money bags. We are not institutional traders. We are not George Soros. We are not Warren Buffett. We are not JP Morgan. We are retail traders, small traders. We have small money. And if we go on one to one, of course, you are spending money on internet subscription, you are paying for power to access the market, and of course, your time. You realize that even if you put $1,000, what you will make out of it will be so infinitesimal, so small, so minute, so insignificant. So that is where leverage comes in. And the beauty of it, compared to the stock market, leverage in the stock market, you can have as high as 1 to 2 leverage, 50% margin to put in. So leverage and margin are somehow related, correlated. In other words, a high leverage means lower margin. The higher the leverage, the lower your margin, the margin that you are required to put in. Also understand that. So leverage makes work easier. It helps us to access more. So that's just the few reasons I can give about you having leverage. When you don't use leverage, you struggle for most of the time. But also, high leverage also has its own drawback, because high leverage means high exposure. So then we're going to look at how you can use leverage to your advantage and how to calculate it first. I think this particular video is all about how to calculate leverage with the way you place a trade. So let's say this account, we it's on 1 to 1000 leverage. All right. So we consider lot size. Now on lot size is this is InstaForex platform. Okay, as you can see here, InstaForex Singapore, InstaForex USA. So this one account is on InstaForex USA. So this is good. Okay, I want to do it because on gold commodities is different. So we're not going to be using gold. So we are going to use, let's use an instrument GBP USD, or I deleted UPSD file here. I can also go to deleted and bring it either or Euro US, any one of these two. Okay, so we are going to use any of these, okay, to do the calculation for our leverage. All right, now let's assume here that we want to buy or sell. Now, what the price we apply to depends on what you want to do. So let's come down to first. We want to buy, we want to enter the market rather. Here you have volume. This volume is the same as lot size. Volume is the same as lot size. So on InstaForex, now in the market there's a standard. In the market there's a standard. Brokers choose their own standards. Now InstaForex standard lots here is equal to the market mini lot size. And the market standard lot size is an equivalent of 100,000 units. Standard lot size in the market is equivalent of 100,000 units. Then mini lot size is equivalent of 10,000 units, while micro lot size is equivalent of 1,000 units. Then you have nano lot size equivalent of 100 units. So InstaForex chose to operate from the mini standard, mini lot size. So the InstaForex standard is equivalent of market mini lot size, which is 10,000 units. So this 1.0 here now on InstaForex is equivalent of 10,000 units. So for the pair Euro USD, you are now saying 10,000 units of Euro USD will be equivalent of so and so amount of GBP USD. Like in this case now you have the price. So price comes in here now. 1.1907 slash 1.1910. So that's the price for sell and for buy. So if I am to buy, for example, so we'll be having 1.1909 multiplied by 10,000 units. Okay, and so that will give you 10,000 multiplied by 1.1908, whatever the price is here currently. And you have in 10,000, we have about 4 zeros. So when we move this decimal points by 1, 2, 3, 4 places, you have 11,907 dollars for 10,000 units of euro. So in other words, so 10,000 euros will now be equal to 11,905 US dollars. So that is what it means. That means that's how much you need to put in to take 1.0 volume trade at this price. If it's selling, that means it will be 11,902 US dollars for 10,000 euros. Okay, so and then do we have up to that? No, we have 250. That's where leverage comes in. So if you now want to apply leverage to now know the margin, what is required of you to put in to take this trade, that's your margin now. So you will be requiring to divide the amount by the amount of leverage you have chosen. If it is selling you have chosen to take, so you will divide it 11,901 by 10,000, which if you cancel out, you cancel out 4 zeros. So you that means that by the time you cancel out the 10,000, rather 1, 2, 3, 4 zeros in 10,000. So that means you have moved the decimal point here for 1 zero, move again here for 2 zeros, and then move again here for 3 zeros. So you'll be having 11.9 US dollars from your account to enter this trade. But now, remember also in risk management, because you need to also consider that the risk you are taking, do not expose more than 10%. 10% is too much. 5% will be okay. Because if you put in 11 points here, you may say it's not 10%, it's too much. So you expose 5% of your trade, max, of the equity you have rather, in your margin. Expose it. Don't expose more than 5% if you really want to trade with peace of mind. Because that's the secret that pro traders have, that you need to also possess. Don't expose more than 5%. So in that regard now, 5% of 5 will be around 5% is even much also. I can think 5% is even much because 250, if you expose 5%, that will give you around, because you also consider two things in a minute, because there's another video I will be shooting soon and that will be about how to avoid whipsaw. This same explainer will come into play. So if I expose 3% or 4% or 5%, let's say I expose 5%, 5%, okay, 10% of 250 will be 25, okay, which is high, on the high side, because that means that you can take 2.0 with this particular one, and that's suicidal. All right, even though you can be protected, but when you now look at you risking 2% or 3% max. So if I take, it means that if there's a whipsaw, if there's high volatility, it can easily be taken out. Yeah, but some aggressive trader can decide to even take that. Yeah, you can take it, but then for you to trade it with peace of mind, it's advised not to. But however, let's even look at this. That if you want to expose 10%, not a problem, but I encourage you to go lower than that. So let's look at exposing just 5%, meaning that we'll be putting in around 11 points. So that 11 point now means 1.0. 1.0. That's what it means. But me, I still encourage you go lower than that. Do 2.5 or 3%. So let's go do that. So in that case now, if we are doing half of this, which is 0.5, 0.5. So 0.5 would be 5,000 units. So 5,000 units multiplied by this, and if I pull out my calculator, so let's do 5,000 units multiplied by the current price at, if you want to buy, for instance, 1.1906. So 1906. That's 1906. Okay. So that's 5,953. So now divide by 1,000 leverage. So what I'll be required as to put in there as margin is 5.953. Let me show you. I placed a buy here, for instance. Okay, so he has placed the order now. So now we are going to change our calculation. We will now get back to 1 multiplied by 1.1905. So divide by 1,000. So that's how much it should be, 5.95. And what we have here, 5.95. So that's how your, this is how you can see the margin here now. So now your equity now becomes whatever the difference is between the balance here and the profit here. So you can see that the profit here is 1 point minus 1.5. So that's why your equity is now 248.5. So you can see your margin is fixed, which is 5.95, based on the leverage you have chosen and the price at which you entered the market. Okay, so that is the way it is done. If I want to sell, this is what it will also give us. It will just be at this price. That means 1901 currently times 5,000. Okay, divided by 1,000. 5.95 also. But guess what will happen now? It will divide this by 2 if I sell. If I sell, it will divide this by 2. It will divide it by 2. Let me show you. So okay, I did this thing, so it's going to change it. Okay, you can see what price did it sell. Okay, you can see. Yeah, we are divided by 2. Yeah, divided by 2. You can see that. So that's the way. This one is hedging now. Hedge has entered into it now. So I can now decide if I close this trade. If I close it by this, go to modify or delete. If I choose to close multiple close by. If I do multiple close by, see what will happen. What is going to happen is that you push the negative to one side, whatever the balance negative is to one side, and put positive to the other side, and then we'll have a little increase that is a little above this 47. So let me quickly do it and you see it. I mean, $3 out of this, no problem. We'll get it back soon. Yeah, let me just teach you this. You can see that, yeah, it added back that differential. So that's that. So now that's how to know that. So take note of this, that to work out your leverage, you need to know the lot size, you need to know the price, current price. and use that to multiply and then divide to get the margin that you have in your trade when you place a trade. I trust that you understand what I've just explained. Go ahead and practice it on your demo. If you have a live account, take small lot size and do that. And see you next time. God bless you.